Yes, student. How are you all? Everyone fine? In this video, we'll discuss the mock test paper conducted by ICI for CA Inter Advanced Accounting paper. We all know that Institute conduct two mock test papers, Series 1 and Series 2 for all the examination. Already Series 1 has been conducted. I think it was conducted in 29 July. We'll have a discussion for mock test paper Series 1 in this video. Now, we all know that a question paper now consists of two parts. One will be multiple choice question of 30 marks which will be compulsory. Second will be descriptive question of 70 marks. In this particular video, we'll be discussing only the multiple choice question based. Multiple choice question we'll be discussing. Now, of course, as a student, you should be aware what type of multiple choice questions they may ask in exam so that you are well prepared before exam. And this particular all test paper, they have asked good quality of question. Let us have a discussion one by one. They have asked three case scenario in this particular question paper. Can we have discussion? Yes, sir. Now come to case scenario one. It is related to buyback of equity shares. Buyback of equity shares. Super Limited, a manufacturing company, has the following summarized balance sheet as of 31st March 2004. Equity shares rupees 10 is fully paid up 17 lakh. Reserve and surplus revenue reserve they have given, securities premium, profit and loss account, infrastructure development reserve. So we all know that infrastructure development reserve are statutory reserve. Secured loan 9% debenture, unsecured loan, property plant and equipment current asset. Okay, sir. Super Limited plans to buy back 35,000 equity shares of rupees 10 is fully paid up on 1st April 2024 at rupees 30 per share. This become buyback price. The buyback is authorized by his article and necessary resolution have been passed. Okay, sir. The payment for the buyback will be made using the company's bank balance, which are a part of its current asset. They are saying we have a huge bank balance, don't worry about that. Answer the following question based on the following above information. As per the Companies Act 2013 under Section 68 subsection 2, we all know that this is a provision of Companies Act Section 68 of subsection 2. The buyback of shares in a financial year must not exceed 20% is not correct. It is 25% of total paid up capital and free reserve. This is only correct. Option number 2 is correct. 20%. So there is no, it is 25%. Let us read point number 3 and point number 4. So 25% of total paid up capital. No, this is not correct. 25%. It should be 25% of total paid up capital and free reserve. 20%. This is also not correct. So two. Option number two is correct. Understood? I hope the first point you have understood. Coming to point number B, how many shares can Super Limited buy back according to the shares outstanding test? So as per the share outstanding test, first we need to find out total number of shares. So it is given 17 lakh. You can see 70 lakh divided by you can say 10. So it become 1 lakh 70,000. So you see 1 lakh 70,000 into 25% is the maximum. So 1 lakh 70,000 into 25%. How much it is coming? Check karo. 1 lakh 70,000 into 25%. The answer is option number 2 is correct. So option number 2 become correct. Okay, sir. Yes, sir. 1 minute. This is correct. Chalega. Then what is the maximum number of shares that can be bought back according to resource test? So first we need to find out paid up capital plus free reserve including securities premium. So let us find out. It is 17 lakh plus 23 lakh 50,000 plus 2 lakh 50,000 plus lakh profit and loss account. But you will not add statute reserve. This will not be added. Be careful. It's coming how much? 17 lakh plus 23 lakh 50,000 plus 2 lakh 50,000 plus 2 lakh. It's coming 45 lakh. So 45 lakh become total paid up capital plus fee reserve including securities premium. Okay. Now this is the total resource. We say oldest fund. Will divide by the buyback price. Divide by the buyback price. So divide by 30 you'll do. Come 1,50,000. Out of these, the 25% is the maximum. So into 25%. The answer will be 37,500. Option number 3 is correct. Option number 3 is correct. Means first you can calculate 25% of shareholders fund, then divide by 30 you can do. Okay, sir? Yes, sir. Then according to debt equity ratio test, what is the maximum number of shares that can be bought back? Let us find out the debt. The total debt is given how much? You can see 9% debenture and a unsecured loan. It is coming 38 lakh plus 8 lakh 50,000. The total become how much? 46 lakh 50,000. And what was our equities? What was our shareholders fund including his free reserve and securities premium total paid up capital already we calculated. The last it was 45 lakh 45 lakh. But we want shareholders fund after buyback. You know that after buyback, your equity share capital will be reduced by the buyback payment. Correct now. So can you say let us will what you will do will assume let us the number of the shares be the number of shares to be bought back be X. Okay. We can assume that. So can you say 30x will be what? The number of shares which will bought back. I'm going to create a CRA. CRA will be created with the nominal value of equity shares bought back. So that CRA will not form part of the shareholders fund. Correct. So as per Companies Act, that capital redemption is whatever you are creating that will not form part of shareholders fund. Understood? So that will be created with an amount equal to the nominal value of equity shares bought back. If the X is the number of shares can be bought back as per this condition, will become 10x. Understood? This ratio become the debt equity ratio should be what? Should not be more than 2 is to 1. So this become debt. This becomes shareholders fund after buyback 2 is to 1. If you solve it, so what answer is coming? Let us find out. It become 46 lakh 50,000 is equal to 90 lakh minus 80x. Now find out x. X will be equal to how much? It is 90 lakh minus 46 lakh 50,000 divided by 80 you'll do. So will be equal to 54375. 54375. Point number 4 is correct. Point number 4 is correct. And so the option number 4 will be correct. Got this point? So with this we completed our case scenario number 1. Chalega? Yes sir. Coming to case scenario number 2. Let us read the question. What they have given. Finance Limited receive a parcel of land at no cost from the government for the purpose of developing a factory in an outlying area. It means they have received some government grant in the form of land. The land is valued at 75 lakh. Means the fair value of land is 75 lakh, while the nominal value is 10 lakh. You all know that whenever we receive land at free of cost, that land will recognize that nominal value. The land will be recognized at nominal value. Additionally, the company receive a government grant of 30 lakh, which represent 25% of total investment needed for the factory development. Means whenever any government grant received for the development of factory, this is nothing but in the nature of promoter contribution. Such government grant will be transferred to capital reserve. Furthermore, the company received 15 lakh with a stipulation that it is used for the purchase of machinery, and whenever we receive grant for the purchase of machinery, then it can be treated as deferred income or it can be deducted from the cost price of asset. Two options has been given. There is no expectation from the government for repayment of this grant. There is no expectation that it will be repaid, and therefore that government grant will be recognized. Answer the following question based on the above information. The land received from government free of cost should be presented at nominal value. Nominal value is 3.10 lakh. So option number 3 is correct. Got this point? Yes, sir. As per AS12, how the government grant of 30 lakh should be presented. 30 lakh is for that promoter contribution, so that will be transferred to capital reserve. So option number 2 is correct. That will be transferred to capital reserve. As per AS12, how the government grant 15 lakh with a condition to purchase machinery, can I say it will be treated as deferred income, and will be amortized over the useful life of the asset in the ratio of depreciation. Now, option number D is what? Point number D is what? Which of the above grant are required to be recognized in SOPL on a systematic basis and rational basis over the useful life of the asset? So, the third grant, that is the grant which has been received for the purchase of machinery. So, government grant of 15 lakh with a condition to purchase machinery. Option number T3 is correct. Understood? Yes, sir. So, this is also very easy, very simple. Can we go to the case scenario number 3? Yes, sir. Axis Limited is a manufacturing company. It purchased a machinery costing rupees 10 lakh in April 2023. Okay. It paid 4 lakh upfront and paid the remaining 6 lakh as deferred payment by paying installment of rupees 1 lakh 5,000 for the next 6 months. So this is deferred settlement. We know that as per AS10, in case of deferred settlement, the cost price of property, plant and equipment will be equal to purchase price at normal credit terms. Ignoring interest element, you can see the payment is what? 1 lakh 5,000 into 6. The payment is 6 lakh 30,000. Out of that 6 lakh is what? Our normal purchase price. So 30,000 will be interest element. During the year, the company sold a land which was classified as property, plant and equipment for rupees 25 lakh and paid 1 lakh as income tax at long-term capital gain on such sale. During the year, the company also received income tax refund along with interest. Okay, so I think the entire para is related to AS3 cash flow statement. As per the requirement of AS3 cash flow statement, how the amount of purchase of machinery should be presented. The purchase of machinery 6 lakh plus 4 lakh, 10 lakh will be the investing activities, correct? And the 30,000 will be considered as financing activities. Whatever they have paid for the purchase of property, plant and equipment, that will be investing activities, and whatever they have paid the interest element, that will be financing activities. Let's see what they have given. So option number 1, 10 lakh investing and 30,000 will simply book. This is not correct. 10 lakh 30,000, this is also not correct. 10 lakh as cash flow from investing activities and 30,000 as cash flow from financing activities. This is correct. Chalega. Option number 3 is correct. Point number B. At what amount of machinery should be recognized in the financial statement? Means as per AS10. So as per AS10 it will be recognized at rupees 10 lakh. So option number 4 will be correct. Chalega. Yes, sir. Then point number 3, how should the income tax paid on the sale of land should be disclosed in the cash flow statement? So any income tax paid related to investing activities will be also classified as investing activities only. It will be option number 2. Understood? Now, how should the interest on income tax refunds to be disclosed in the cash flow statement? Now, just try to understand when you read the para. So they have written during the year the company also received income tax refund along with the interest. So if the income tax refund is for operating purpose, then interest on income tax refund will be also operating activities. Correct now. But can you see, because the entire question is related to investing activities, so we can assume that whatever income tax refund we have got, that is was related to investing activities. Therefore, interest will be also classified as investing activities because it has been assumed, because the question is related to investing activities. Therefore, we have assumed, and in the solution also they have given that only. Option number 2 is correct, cash flow from investing activities. However, because the question is not clear, you can assume, is I don't know what assumption you will take in exam. Income tax refund is normally what related to income tax is normally related to operating activities. Whatever interest we are paying on that, whatever interest we are receiving on that income tax refund will be also operating activities. But because this question is related to investing activities, so we can take this point as a consideration that cash flow will be from investing activities, and the answer is also given that only. Chalega. Then some more question they have given. Point number 4, Yan Limited borrowed 10 crore for construction of plant at a rate of 10% per annum and interest paid annually is 1 crore. So this specific borrowing, the construction was being carried out, and out of the borrowing 4 crore was temporarily placed in a fixed deposit at a rate of 6% per annum and interest earned is 24 lakh. At year end, how much cost of borrowing Yan Limited will be capitalized? So can you say whenever we take some specific borrowing, then borrowing cost less income earned from temporary investment will be capitalized. Borrowing cost is 1 crore minus 24 lakh. Is 76 lakh will be capitalized. So point option number C is correct. Interest paid less income on temporary investment, that is 76 lakh will be capitalized. Very simple. Can we come to next point, point number 5. Cost of current investment acquired was 1 lakh, but the fair value was 80,000. So that as per AS13, it will value at cost price of fair value, which is lower. So lower is 80,000. The investment was recorded at 80,000. Okay. Now the fair value of investment become 1 lakh 20. So next reporting date, can I say once again we'll compare cost price and fair value only. So cost price is what? 1 lakh and fair value become 1,20,000, the lower is 1 lakh. Therefore, can it will be equal to the carrying amount 80,000 now become 1 lakh. So there is a gain, and that gain will be transferred to profit and loss account. Or we can say there is the reversal of previous write down. Reversal of previous write down that will be transferred to profit and loss account. That what value should be recorded? Of course, it should be recorded at 1 lakh only. And how much gain will be created to PL? So 20,000 will be transferred to profit and loss account. So what they have written, option number B I think is correct. Current investment will be recorded at 1 lakh and the gain of 20,000 will be created to profit and loss account. So option number B is correct. One more question is there. Question number 6. In determining the cost of inventory, it is appropriate to exclude certain costs and recognize them as an expense in the period in which they are incurred. Of course, we know there are some expenses will not be capitalized or will not be added to the cost price of inventory. For example, storage cost, abnormal loss, correct, selling and distribution expenses, administrative expenses will never be capitalized. This will be charged to profit or loss account as an expense the year in which they are incurred. Which of the following is not an expense? Abnormal loss, okay, correct. Storage cost, correct, unless the production process requires such costs, correct only. Raw material cost will be added to the cost price of inventory. So option number C will be the option which you need to take. Option number C. Option number C is not an expense that will be added to the cost price of inventory. With this, we completed all the discussion of which part? Only MCQ part. I hope you have understood and you will gain confidence that this type of question so we can easily attempt and we can easily score 30 out of 30. Correct now. So your target should be that out of 30 minimum 25 marks, 25 not 24 marks you should minimum. Can be more than that but it should not be less than that, and you have the conceptual knowledge of the particular point which they are asking, you will be able to attempt it. Chalega. So I hope you have understood. MCQ very easy to score once you know the concept, a concept of that part which have been asked in MCQ. Got this point? I think these MCQs, whatever we have discussed right now, will give some confidence that yes, you can attempt it. So we'll meet in the next video sometime. We'll be discussing some descriptive question also, whatever has been asked in MTP, as well as we'll have a discussion on RTP also. Till then, bye bye. Take care. Enjoy your study. All the best for your preparation. Bye bye.